I'm Caroline Hyde. This is Bloomberg Technology. Coming up, Snap the big picture. We'll get you up to speed on the trading day debut as tech ushers in its first IPO of the year. Plus, the early believers, Lightspeed Ventures, was the first to bet on a startup named Snapchat. You'll hear from the partner who brought them on board. And the $5 billion club. How today's monster IPO changed the fortunes of Snap founders Evan Spiegel and Bobby Murphy. First to our lead. Snap wraps up its first day of trading on the New York Stock Exchange. Shares closing up 44% from its listing price and reached a high of just over $26 before closing at $24.48. The maker of the disappearing photo app ended a long tech IPO drought. So will its debut open the pipeline for other companies? Joining us is Bloomberg's IPO reporter Alex Marinka and in San Francisco, Bloomberg Technology reporter Sarah Fryer, who covers Snap for us. Alex, let's go to you with your IPO know-how. How do they manage expectations? Because many feeling perhaps 44% pop. Is that a little bit too much?
It seems like the sweet spot. If you think about the range, a typical IPO, you'd like to see 20 to 30%. Mm-hmm. This one was gonna have a bit more buzz baked in. If you look at Twitter, it was 70+% on day one. Facebook with the glitch was less than 1%. So somewhere in between seems like they kind of hit the sweet spot there. And when I look at trading and how the stock kind of flittered around that $25 mark all day, it was fairly stable. There wasn't a lot of swinging going on. We saw it sell off toward the end of the day there, down to its closing price of $24.48. But it seemed like a decent way to go out in your debut here. No one's quite complaining about the returns for investors.
I mean, looking at this IPO scoreboard, you look at Facebook, up now almost triple its initial IPO value, but after a year was down 31%. But Twitter, you mentioned it, on its debut, opened up more than 73%, but look, after a year it was down 10%, now down 65%. So it's worth remembering that whatever happens on the first day of IPO doesn't always remain. Sarah, talk us through the managing of expectations and indeed perhaps where the roadshow wasn't all smooth. There were some bumps they had to iron over, many questioning the user growth.
Absolutely. So this is a company that is trying as hard as it can to not set up those comparisons to the companies you just compared it to, Facebook and Twitter. This is a company that doesn't want to be judged on its user growth, but it's going to be judged on its user growth because that's a metric that slowed in the fourth quarter. And if you don't have the users, you can't make the money off the ads. But Snap's argument is that the user engagement on its app is just so immersive and so frequent that it kind of doesn't matter the quantity so much as the quality.
Yeah, we're 18 times being logged into the app, I think, a day. I mean, that's pretty amazing statistics. Alex, you and I were down on the New York Stock Exchange. It was a buzz, a frenzy. Goldman Sachs had their role cut out for them. They were being stabilization for the entire trade, and they took their time over it, didn't they?
They did. They did take their time, and that's kind of what they're known for. And what I can tell you now is that you saw Bobby and Evan ring the bell. We were both there for that. I disappeared a little bit, chasing them down because they actually went over to Goldman to watch the first trade happen. So the execs had to get there. They had to kind of work through that. And the shares finally started trading at, $11.19. So you can see that gap between the 9:30 open there. And it was so important for them to find this sweet spot where they thought that the shares would trade at to get this nice pop. Yeah. You saw them price at $17 a share, even though our sources say the deal was 10 times oversubscribed. So there is some kind of read-through that they maybe could have priced it a little higher. But if you think about the company's impetus for pricing it at 17 instead of making, let's say, $200 million more at $18 a share, doing that kind of rewards the shareholders who are willing to take a bet on them at the listing day and say, look, we'll give you a little bit extra wiggle room for your returns. And even though we're not taking so much money off the table, it's $200 million, so we can kind of ease our way through that in trading going forward.
Sarah, you're out there in Silicon Valley. The quick question, and so much hope was riding on the success of this particular IPO and how it trades in the next few days, weeks, months, years, is because there's plenty of other companies sat there waiting to enter the public market. How do you think it's been digested in Silicon Valley by the investor base and by other startups?
This was a very high stakes IPO because, as you said, there are so many private companies that have ballooned in valuations into the billions and in some cases tens of billions, like companies like Uber. And people have just been waiting for these companies to go public, but it hasn't been necessary because there's so much capital available to them on the private market. And also the markets were a little bit volatile. So they're looking at this Snap IPO. This is a big company, really the biggest social media IPO since Twitter. And they're saying, hey, if they can do it, that shows that there's an appetite on the market for these kinds of deals and maybe for highly valued stock.
I mean, Alex, you're talking to sources already. What are they saying? Are they sort of lining up who they should be talking to next?
Basically, yes. And so to Sarah's point, the average company, private company, is now staying private for 9 years. Snap is younger than that, which kind of used to be the MO for companies going public, right? They would go public when they were less mature. That hasn't been the case these days. Snap is kind of going against the grain by going out as early as it was. And, you know, there's been these arguments in the past year where the buy side in equity markets has been very risk off. So they want to see more profitability, they want to see more stability. But Snap is here coming out with an unprofitable company whose business model is only, you know, probably about 6 quarters old, and the deal itself did well. Again, still question marks about the long-term returns, where the stock goes, how the company fares. But this is a bit of a proof point saying, look, maybe staying private forever is not necessarily the best thing. Maybe having your judgment day out in the public markets is just as good as doing it privately with basically the same investors, these big crossover names.
Uber, Airbnb, hint, hint, nudge, nudge, wink, wink. Last one for you, Sarah, because you also cover Facebook, and the question marks that Alex was spelling out there, one of them is, well, can Facebook just copy what they do and do it better, and they've got bigger user base?
Absolutely, they can, and they have. Instagram in August copied one of Snap's most popular features, its Stories feature, where people can create daily reality TV shows of their life. This is a product that people are now using on Instagram now almost as much as they use it on Snapchat, or maybe even more by this point. And this is going to continue to happen. Facebook's app WhatsApp, a very popular chat app, more than 1 billion users around the world, had a similar feature added earlier this year. Facebook is considering doing it too. So this is just a constant drumbeat of copying of Snap's way of doing things. And yes, it does harm, it harms the potential. We'll never know how much faster they could have grown if it weren't for that. Now, the company doesn't attribute their loss of growth to Instagram, but it certainly is interesting. But one positive side of that I do want to point out is that advertisers say, it's a little counterintuitive, advertisers say that they actually can now justify buying Snap's ads because the format is now the same as ads they can buy on Instagram.
Yeah, so it vindicates the business model to a certain extent. Great reporting from both of you throughout the day. Alex down at the New York Stock Exchange with me throughout the day, and of course Sarah Fryer from San Francisco. I know we'll be coming back to you many a time about the performance of Snap going forward. Now, coming up, we continue to dig into Snap's first day of trading, just how big of a paycheck are the co-founders bringing home after Snap's pop in the share price. We'll hear from the Bloomberg's billionaire team. That's next. And our one-on-one conversation with New York Stock Exchange President Tom Farley. What he had to say about Snap's trading debut. This is Bloomberg.
I take great comfort that the stock opened at 24, and it's trading smoothly right around that number. That's exactly what you want on the first day, especially of a large IPO.
Now, more of our in-depth coverage of Snap's first trading day. The company's public offering added over $1.5 billion to the founders' fortunes. Investor appetite for shares propelled Evan Spiegel and Bobby Murphy to up more than 150 places on the Bloomberg Billionaire Index. Joining us is the man who counts that, Tom Metcalf of Bloomberg News. A busy day for you. I'm looking at Richco on the Bloomberg terminal. You dig in. Evan Spiegel now ranked 280, Bobby Murphy 281. They have $5.4 billion. How is this being broken down? How much more was added today?
It's an incredible, sort of rocket ship, basically, they're riding on Snap. So today, really, they added 1.7 billion to their individual fortunes, and that's just from what it listed at $17 yesterday. So if you look back at the course of their fortunes, they were like nowhere in 2011, 2012. All of a sudden, 2014, you get this $10 billion valuation of Snap, and now I think it closed at like $28 billion today. So it's one of the all-time fantastic growth stories. It's just whether it's going to continue or not.
And now perhaps their cash is a little bit more liquid. We'll see how much they start spending. How does this rank them in comparison to the rest of the big tech billionaires out there, 280, 281?
They're definitely up there. So, the classic names to compare with might be Jack Dorsey of Twitter. He's actually only got about 1.5 billion. He also,
poor guy.
Yeah, I know. You've got to feel sorry for him. He's got two jobs. He's also CEO of Square. And then along with the other sort of startup, sort of unicorn head honchos, the three Airbnb co-founders are about 3.6, so they're ahead of them. And they're just behind Travis and Garrett Camp of Uber.
Interesting.
But obviously they're way behind, say, the Jeff Bezoses, the Mark Zuckerbergs, and the Bill Gates, who are up in the 50, 70, $90 billion range.
Give us, not only, we were just looking at a screen there, talk us through it, because we want not just the founders that made a lot of money, but also those venture capitalists that made a big bet in the early days.
Yeah, exactly. So Benchmark, just today, they made about 900 million and they've got about a $2 billion position. And then Lightspeed Ventures, there's a great story about how kind of Evan Spiegel decided after dealing with Lightspeed Ventures that he'd make sure he had voting control of Snap, and they've got about $600 million gain this year.
Look at that, $613 million, and we're going to be, of course, looking at my conversation with Jeremy Liu, who was one of the first investors, of course, at Lightspeed Ventures. What about the bounce that we tend to see on the first day? We know that it's up 44% today. Twitter was up 73% on its first day of trading. So these sorts of fortunes aren't always stable. Yeah,
exactly. It doesn't really sort of point towards what's going to be happening in the next year. Twitter up, as you say, something like 70%. It's now off its IPO price, down about 30. Facebook was pretty flat on the first day of IPO, and now it's up, since its IPO, 260%.
Hence old Zuckerberg's wealth. How is Spiegel and Murphy's sort of fortunes changed in the founding of this company in particular? You were talking us through how it was like a rocket ship and the fact that it all sped up so quickly, but is this now the point that they actually cash out? Because a lot of it is going to be locked in for the foreseeable future for us.
Yeah, so they both sold about 16 million shares in the offering. So they've kind of taken home at the $17 price, $272 million. You get tax on that, but they're looking at a bank account of about $180 million. In terms of the Snap shares, there'll be restrictions on when they can actually start selling. And obviously they've got a huge position each in Snap. It's sort of about 20%, and so each. So if they started selling that, then you'd assume the value of their holding would drop down. But no one can feel sorry for them. They've done very well, and I'm sure they'll be celebrating in LA tonight.
I hope they will be, and I'm sure there'll be plenty of champagne going around for all those who were down in the New York Stock Exchange today, and indeed flying back to LA. Pretty exuberant, absolutely brilliant reporting. I urge all our viewers to get onto Rich Go if they've got a Bloomberg terminal. Tom Metcalf of Bloomberg News, fantastic, thank you. Now, Apple is suing Qualcomm for the second time this year. This suit was filed in the UK courts on Thursday and alleges Qualcomm unfairly charges royalties for technology covered under Apple patents. Now, Apple is separately suing Qualcomm in California, accusing the chip maker of withholding a $1 billion rebate for licensing fees. Apple alleges Qualcomm is holding back the money as punishment for cooperating with Korean antitrust regulators. Now, Qualcomm has said it will fight those charges. Now, we'll have plenty more on Snap this hour, including interviews with two early investors. Next, we'll hear from General Catalyst partner, that's Hemant Taneja, who says there's strong demand to invest in companies like Snap. And later, Jeremy Liu of Lightspeed Ventures, who wrote the very first check to Snap CEO Evan Spiegel. And a reminder, of course, that our interactive TV function, you can find it at TV Go on the Bloomberg. You'll not only be able to watch us live, but also see previous interviews and dive into any of the securities or Bloomberg functions we talk about, including everything related to our Snap coverage, of course. This is for Bloomberg subscribers only, though, I'm afraid. Check it out at TV Go. This is Bloomberg. Now, all day long, we've been bringing you interviews from Snap investors who were there from the very beginning. Earlier on Bloomberg Markets, my colleagues Scarlett Fu and Oliver Rennick spoke to Hemant Taneja, General Catalyst Managing Director. He gave his thoughts on the company's performance in the first day of trading.
I think the successful start that you're seeing is a reflection of really two things. One is how popular the product is and how well the company has executed over the last few years. And the second, frankly, also is that there haven't been a lot of tech IPOs, and there's a strong investor demand to invest in companies like Snap. it's great to see.
It's great to see, and if you look at how the stock is trading right now, $25 and change, around 26, and of course it IPO'd at 17. Where do you see it closing, and where do you see it trading in a quarter from now?
Well, I can't see the future. I mean, I think the things I can comment on, the company has done a good job setting expectations at the right levels. I think you're seeing the strong investor sentiment behind the company, and every decision they're making is for the long term. You know, what happens sort of in the next few days is really hard for me to predict, but you know, so far so good.
So far so good, and the reason I ask that, of course, is because you could go the way of Facebook, where you didn't have a great debut, but the stock has done very well despite a lousy first quarter, or Twitter, which did better, but then has fallen below its IPO price about a year and a half into its existence as a publicly traded company. What is your confidence that Evan Spiegel and Bobby Murphy can guide Snap to avoid going the way of Twitter?
Yeah. So I think this is the key question that everybody talks about here in Silicon Valley as well. And the reality is every one of these companies is very different from each other. You know, Twitter is, you know, it's still the 140 character metaphor for broadcast. You know, it serves a very important function, but it's very different from what Snap does, which is sort of communication and for the everyday lives. I mean, there's hundreds of millions of people that use it multiple times, sort of 10 to 20 times a day. So what I would say is I look at sort of how Evan and Bobby, to your point, have executed over the last 6 years, and how many interesting products they've launched, and it's, you know, that's a testament to how different the company is from Twitter and even Facebook. When they had gone public, they were sort of one product. They were really sort of one use case, and you know, Snap has launched a great communication app. They've redefined how to watch television on mobile. They've actually created really interesting branded content that's interesting to advertisers. So a lot of exciting innovations that have come out of the company over the last few years.
Hemant, when people were starting to question the sort of ubiquity and the lifespan of Facebook's original basic product, right, going on the social media network, the company started to demonstrate that it was going to be able to create value through M&A. It was going to acquire growth in many ways and expand into different areas. When you look at the future for Snap, sort of along the lines of what you're just talking about, do you see the product as we know it now changing a great deal, or do you see them tacking on different businesses and different lines of products onto what we know the app is now?
Snap is a product-first company. They have continued to innovate. I certainly expect them to keep doing that in the future. They've described themselves as the camera company and focused on inventing sort of the next camera metaphor. That, you know, form factors for camera haven't changed for a long time. You know, will they do acquisitions? Hard for me to say, but they've certainly done small tuck-in acquisitions in the past to bolster their team and product capabilities. But I can tell you everything there, and Evan sort of has described himself as, you know, half the time he spends is on product. That I see that maniacal focus continuing in the future as well.
My colleague Joe Weisenthal said that Snap is basically a 3 times leveraged, a short old people ETF, and of course that's a funny way of putting it. But you know, when you look at the audience that it's focusing on here, we're talking about millennials, notoriously fickle. The market cap of this company is now above Deutsche Bank, United Continental, CBS as well. Does a company like Snap, now that it's a publicly traded entity, need to move beyond the millennials to a bigger audience, to, for instance, their parents?
Well, Snap is a company that very much thinks about building mainstream products. They've certainly launched products that have started with the millennials, but they've been designed to be very mainstream. And if you look at the number of times, you know, half their users are over 25, and if you look at the number of times folks that are over 25 that use this product, it's a very high frequency. It's over 10 times a day, and that's not a product you would say is a millennial-only product. It's very much mainstream from the way I think about it.
Hemant, how long will you hold on to Snap as it not being a profitable company?
That's a difficult question because we have sort of in general had a pretty set methodology for how we exit companies after they go public. We distribute them over a certain amount of time over time, and I think we're going to sort of stick with that strategy. You know, it has less to do with how the company itself is performing up or down. It's very much about just what we have communicated to our LPs and how we handle getting them back their returns, if you will.
You are a Series B investor in Snap. You bought your stake in June of 2013, so you have years of experience in dealing with Evan Spiegel. But what is your confidence that the two of them controlling more than 90% of Snap's voting shares, that won't hurt the company as a publicly traded entity?
Well, I admire them for being transparent about their long-term views of how they want to build a company and doing this sort of a priority. We invested in them. We backed them because we think they're brilliant, and they've certainly proven to be so. So we have a high degree of confidence in the way they've made decisions, and hopefully they'll continue to innovate the way they have in the future, in the past.
That was Hemant Taneja, Managing Director of General Catalyst. Now, an update from Amazon after a massive internet outage in the US earlier this week. Now, the company says human error at its cloud business caused those sweeping internet outages that lasted hours on Tuesday. It cites efforts to fix a billing system bug for the prolonged disruptions. Amazon says an employee accidentally switched off more servers than intended, causing errors that then cascaded through its S3 service. The service is used to house data, manage apps and software downloads by nearly 150,000 sites. Now, coming up, Snap shares soar during its trading debut, but the company still has to address slower user growth. We'll dive into the metrics next. From New York, this is Bloomberg.
I'm Elisa Parenti, and you're watching Bloomberg Technology. Let's start with a check of your first word news. Attorney General Jeff Sessions says he will recuse himself from any federal investigation specific to alleged Russian interference during the presidential campaign. Sessions faced mounting pressure to step aside after revelations he had talked with Moscow's U.S. envoy during the campaign. Egypt's top appeals court has acquitted former President Hosni Mubarak on charges of killing protesters during the 2011 uprising. Mubarak was sentenced to life back in 2012, but another court overturned the verdict 2 years later. French presidential candidate Marine Le Pen laid out the nationalist policies based on economic patriotism that would be enacted if she wins the election. They include a 35% tax for French companies that produce their goods elsewhere, then re-import them. Independent candidate Emmanuel Macron also laid out his platform. He says he won't change the retirement age or cut pensions. He does want to cut costs and bureaucracy so it's easier to hire workers. Iraqi civilians continue to flee Mosul on foot as Islamic State launched counterattacks along the southwest. The offensive for Iraq's second largest city is causing high numbers of displaced people. Syrian forces battling Islamic State say they have recaptured the town of Palmyra. The desert town is famous for its ancient Roman monuments. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Elisa Parenti. This is Bloomberg. It's just after 5:30 p.m. Thursday here in New York, already 6:30 a.m. Friday morning in Singapore. I'm joined by David Ingles of Bloomberg with a look at the markets. David, good morning to you. A little bit of a step back here in the U.S.
Yeah, I mean, as one would expect, there's not a lot of risk appetite as we make our way into Friday here in the Asia Pacific. As you mentioned, of course, the pullback across global equity. So, I mean, you look at the early indications here. New Zealand's the first market open up. We're off by about 1/4%. You look at futures in Australia. That's the next one to open up in about 30 minutes. And we're looking at a likely pullback there of just under 0.5% there on the ASX 200. Japan, though, is one market that may actually hold steady because of the weak yen with jobs and in the inflation data coming through from Tokyo a bit later on. And just very quickly before I go, we're watching Chinese markets very closely today. The NPC, the National People's Congress, kicks off in Beijing on Sunday. That's essentially where you get things like the growth target for the year, among other things, the budget and sort of economic priorities of the government. So I will be talking a lot about what that means and what those targets may be. So lots to talk about today. I'm David Ingles here in Singapore. More from Bloomberg Technology next.
This is Bloomberg Technology. I'm Caroline Hyde. Now back to the top story of the day. Of course, it's Snap, the first day of trading at the New York Stock Exchange, and Snap shares soared on its debut, opening 41% above the $17 initial public offering price. Yet, the company still has some things to prove. One big concern for investors, well, is slowing user growth. On Snap's IPO roadshow, the company told investors, well, much of this problem was due to an issue with its Android product. But some were skeptical of that. Here to dive into Snap's user growth is Bloomberg editor-at-large Corey Johnson and Jitendra Warrell of Bloomberg Intelligence. Good afternoon, gentlemen, live from San Francisco for us. And Corey, first of all, you've at times tried to, perhaps harness some of our exuberance when it comes to Snap, particularly about the user growth. And this doesn't seem to have harnessed the exuberance on the share price today, but it is something that they're going to be measured against as time goes forward.
I mean, fundamentally, for this company, for this business to grow into the valuation it's at right now, it's going to have to be a better business. It's priced as if a lot of things are going to work, but when I looked, through the SEC filings, through the S1 statement, the amended S1 statements, one of the biggest issues was this rapid decline in user growth, and we've discussed it a little bit. But they've certainly acquired a lot of users, and these are rabid users, and they like to talk about the engagement, how much time users spend on the service, perhaps in part because the size of the user base isn't actually huge yet, right? It's half of Twitter's, it's a fraction of what Facebook's looking at. But maybe more importantly, the growth has slowed down dramatically. They added only 5 million users in the fourth quarter of last year. And even the quarter before, the user growth was also quite slow compared with historical numbers. In fact, going into the few quarters before that, there was an acceleration in growth rate. Yeah. Then the growth rate fell off dramatically. And that happens, it coincides exactly with the launch of Instagram stories. And that, to me, is the most disconcerting thing. The suggestion out there is, despite the really cool filters and other things that Snapchat has unique to Snapchat, Instagram's eating their lunch when it comes to doing this sort of storytelling on the mobile app. And you can see it, I think, in the user growth numbers.
Yeah, the copycat is a key concern. Looking at the Bloomberg, already deep diving into the analyst recommendations that we have on the Bloomberg for Snap, we have only three, but still 2 of them are sell, 1 of them is a hold, not a single buy. And in fact, Pivotal Research saying this share could drop all the way down to $10. Jitendra, give us what the opportunities are for scale, though, because you've highlighted that, yes, analysts, we have seen the revenue perhaps grow, but perhaps the overall increase in user base slowing, but there is still potential for it to exceed its current form.
So if you actually look at their user growth issue, right, I mean, they're blaming it on the Android performance issues, but if you split it by geography, what you'll notice is the rest of the world, not Europe and not North America, is what showed the slowdown. So they just have to show over the next 2 quarters that they can be resilient, like in the face of increasing competition from Instagram, like Corey mentioned. If they whiff that numbers, I mean, there's a serious problem here.
Jitendra, do you think that what are the opportunities for growth, particularly outside of the age range, Gen X, millennials? People are now talking that parents are busy Snapchatting. Is that really the case? Will they look outside of the current age group?
I don't really think so, because this is a millennial-focused platform. If you look at their strategy overall over the last couple of years, it's been very millennial-focused, and they've shown that they get this audience better than most social networks that are out there. So I think sticking to their strengths is a good thing. Having said that, if you look at last couple of months, you'll see an uptick in 35-plus audience based on what Comscore data is showing. That's interesting. So maybe bringing in celebrities and followers that they have onto the platform to get some of this peripheral user base on could be one of the strategies.
I mean, they're already celebrities in their own way, Corey. We're looking at a picture of the social media age demographic breakdown. What's interesting is potentially they were already hitting saturation point when it comes to the United States. Others saying, look at the rest of the developed world for them to expand. They have been looking at their international reach.
Yeah, so internationally the company's been growing, but growing at considerable expense. It appears that the service either has become suddenly expensive to provide for U.S. users, or the international users just cost a lot more for them to provide for. So while the international growth might offer some opportunity for them, it's also coming at a great expense. This is a business that has had negative gross margins for every quarter of its existence except for the last 6 months. And so on a trailing basis, you've got negative gross margins. As I mentioned earlier on Bloomberg Radio, there are 552 stocks out there with over $10 billion market cap. only Snapchat and National Oilwell Varco have negative gross margins. That's just not a business. You know, the very essence of any business, whether you're making oil wells or selling widgets or selling Snapchats, is you got to sell something for more than it costs. These guys are unable to do that.
And Jitendra, when we look at your Bloomberg Intelligence analysis, you have dug into looking at the market capitalization in terms of the ratio of the users that they have, the user base they have, and they say their market cap value per daily active user is significantly less than Facebook and Twitter was.
Yes, that's one way of looking at it, but actually if you look at the big picture and compared to all the IPOs, all the key IPOs that happened over the last decade, Snapchat's coming out right at the top of most of them. And with those outsized valuation comes outsized expectations. So revenue growth, I don't feel that should be a worry, to be honest, because they've just started monetizing it. But user growth, if they show any weakness, especially given Instagram's ramp, that would be bad news for the company.
Jitendra, it's interesting. We just had Sarah Fryer on saying that actually it's a bit like when Apple went into music streaming, Spotify's own business model was sort of vindicated to a certain extent. Do we think the fact that perhaps Facebook is doing everything they can to copy Snap because they couldn't buy it, does that actually vindicate it to advertisers that this is where you want to be actually splashing your cash?
Yeah, see, that's why it's a wait-and-see story, right? Like, initially, you'll have the experimental budgets that advertisers spend on everybody but Google and Facebook distributed to Snapchat as well, and that's where their revenue growth initially will come from. But longer term, if they prove that they can hold the engagement among this core millennial group that they have, and they continue to make it easier for marketeers to advertise on their platform, then their revenue can scale. So it's really a show-me story at this point.
Show me story. Well, the shareholders didn't wait. It would seem they popped the share price, and it was a very good debut. The second best IPO, big IPO that we've seen in the last 5 years. Bloomberg's Corey Johnson, fantastic analysis throughout the day and on this program. And meanwhile, Jitendra Worrell, do check him out on Bloomberg Intelligence on the terminal. Now, a story we're watching. Uber wants to reintroduce its self-driving cars in California, but legally this time. Just 3 months ago, Uber's pilot program was pulled off the streets of San Francisco for failing to properly register with the state's Department of Motor Vehicles. Uber wants to play by the rules this time after expanded its program from Pittsburgh to Tempe to Arizona last week. I hope so. I want to give them a go. Now, coming up, we speak to the first Snap investor. That was Jeremy Liu, on what made him bet on Snap and his, well, complicated relationship with the company's founders. That's next. And we've been hearing from a variety of voices on Snap's trading debut, and from the NYSE, President Tom Farley, to numerous investors throughout the day as well. Another voice, Sean Stifel, Navy Capital Portfolio Manager, who thinks, well, Snap will continue to lead in trends for copycats. Check it out. This is Bloomberg.
Snapchat is proven to be in the pole position as the innovator. They are constantly coming out with the newest technology that's being copied. We believe that Snapchat, as phones become more sensor-oriented and more 3D-oriented, is going to be in the pole position as we go into the next phase.
Now, a story we're watching for you. Alibaba rival JD.com is stepping up the competition. The online retailer is selling its finance arm for $2.1 billion in cash and will retain a share of future profits. That sets up another battle with Alibaba, which has spun off its own finance unit, Ant Financial. JD.com is backed by Walmart. Now, Snap's strong showing displayed the company's ability to grow quickly and fulfill its promise of new products to change how people communicate. But not everyone is on the bandwagon. Joining us now is Brian Weiser of Pivotal Research, who just now has put a sell on Snap. Great to have you with us, Brian. Thank you. I was just looking at the analyst recommendations on Bloomberg, noting that you have a $10 price target. Why so low?
Yeah, well, that's where the DCF shakes out. I consider myself cautiously optimistic about the business, but when you roll out a model that gets to about $7 billion of revenue by the year 2023. I assume they can get to about a 30% adjusted EBITDA margin, which turns into about $2 billion. Take off some CapEx and acquisitions, bring that back to the present using discount rates that are similar to what we might use for Facebook, which arguably is a little generous. Add a little bit of extra risk, add in some net operating loss carry forwards, the value of the cash on the balance sheet, you get to about $16 billion. One thing that a lot of people probably aren't fully considering is that the right share count number is probably closer to 1.6 billion for this year, not the either 1.1, 1.2, or 1.4 that I'm seeing. And you end up with $10 a share.
So yeah, on a diluted basis, there are far more shares out there that could be converted. What about the future opportunity of growth, though? They've been looking at hardware, they've been looking at international growth. What is it that makes you feel that it's only going to be $7 billion that they're going to be raking in by 2023?
Well, I mean, I guess it could be 2 or it could be 12. They could go down a lot of different paths, but I'm working under the presumption that, and there's a lot of assumptions to be clear to get there, that they can increase some mix of users and time spent with the platform, and that their monetization will relatively underperform versus Facebook based on how we know that advertising sales works, which is to say that the biggest players tend to get a disproportionate share of the revenue. So with a number of assumptions around how the advertising business plays out, we assume that they can get to the numbers that we've assumed. Make another assumption around international growth that underpaces domestic growth. Now, to the point on non-advertising businesses, I mean, if we saw a very clearly outlined business plan, a lot of signs indicating meaningful investment towards those other business initiatives, and they look significant, then we could imagine modeling them out. But even like for Facebook and Oculus, I mean, it's nice to imagine what that business is. It's not clear it's ever going to be material to Facebook. So, hey, Snap has spectacles. It doesn't mean that they can, it's not necessarily a business worth accounting for at this point in time.
Wow. And what about the ongoing competition that we're seeing from Facebook? Is that something that you're baking into your overall outlook on the business, the fact that so far Instagram seems to have pinched some of the ideas and done it rather well?
Yeah, absolutely. I think that Instagram is bigger than Snap, even among younger audiences in terms of the time spent and the total number of users. The ad products are sufficiently similar, and you have superior targeting, not to mention established relationships between Facebook and basically every advertiser on the planet. That is not true for Snap at this time. Now, that doesn't mean that Snap can't generate ad revenue and meaningful ad revenue, but it's going to be easier for Instagram on a like-for-like basis to do this.
$10, your price target. When do you see it moving? Do you feel in your heart of hearts that the market will follow you within the 12-month trajectory?
I'm trying to assess what I think the value of the stock is.
Yeah.
What happens from a trading perspective, I'm not focused on the day-to-day of how the stock might move at any one point in time.
Brian Weiser, it's been so fantastic having you on the show to come out and speak to us just as you put your analyst recommendation out on Snap. Hopefully we will be able to speak to you in the future. Of course, Brian Weiser of Pivotal Research, who has a sell rating out on Snap. Coming up, we speak to the first Snap investor, Jeremy Liu, who made his bet on Snap and, well, what made it? What made his also complicated relationship with the company's founders? That's next, and this is Bloomberg. Now, a number of Silicon Valley venture capital firms will make a small fortune from their investment in Snap. Lightspeed Venture Partners is one of the largest outside investors. We caught up with the very first investor in the company, Lightspeed, of course, Jeremy Liu, and asked what made Snap such an attractive investment. Take a listen.
When we met Evan and Bobby and we heard about their vision, they talked about how there was something missing from social media, how it had become almost like a highlight reel for your life, where it was creating this sort of performance anxiety for people. Unless they were looking pretty or perfect, they weren't putting themselves on social media. And that meant that instead of people being able to see the full 360 degrees of people's lives, they were just getting this tiny little sliver. And what Snapchat did by making delete a default was to bring back the spontaneity and emotion and authenticity of communication that people have always had with their close friends.
I mean, it was quite amazing. You then committed to 2 subsequent rounds, more than $8 million. What did you see in terms of the growth? What potential that now the market is questioning do you still see in terms of the growth trajectory?
Well, when we first met the company, they had less than 100,000 daily active users, and most recently it's up to 158 million daily active users, so it's certainly grown a great deal. But what we saw at the time was this amazing engagement. People were using the app many days a week and many times a day. And that's just continued to be the case. So today, people are opening the app 18 times a day. And when you see that, it's become a daily habit for people. And when you can become a habit like that, you can build really interesting and powerful companies.
But many are now feeling that the growth has fallen below 50% in the last quarter of last year. Is that something that you think will re-accelerate, or does it not need to?
You know, I think when you become part of popular culture and when you see that user base aging up, so it started off with mostly young women when we invested, mostly teenage women, teenage girls, I suppose. But today you see that that is being spreading to you know, people in their 20s and in their 30s and even beyond. And as you see that broadening, you can gain a lot of confidence.
What about geographically speaking? Because they've committed to the developed world only. They say you need high-speed, powerful phones. Where else other than the United States? We're almost hitting saturation point when you look at the US. Do you think there's more room to grow within the United States, but where also geographically?
If you think about the places that have high-speed internet connections today, it's the US, North America, which has about, I think it's about 70 million of the daily active users. Europe is also very big. And then rest of the world encompasses some of the parts of Asia that have more developed, you know, telecom, parts of the Middle East and some other areas as well.
Do you need to expand past just Gen X, millennial? Do they need to lure the parents of Snapchatters?
Well, you know, if you take a look at Norway, it was interesting. Back in, I think it was probably the fall of 2012, Snapchat hit the top 3 in the App Store for Norway, and that was the one place that it got big faster than the US. And there you see it being used by people all across the spectrum in terms of age and gender, and it's really become embedded in the society. And so that gives you confidence that there's existence proof that this can be something that becomes used broadly by everybody.
And what about hardware? How much does that become an important factor to the business?
Well, spectacles are fun. I was actually just wearing them this weekend. I went skiing with my kids, and it was just the perfect way to be in the moment and to capture some of those memories without having it being intermediated with a phone between you and the experience that you're having. And so it's been a terrific experience.
I mean, Jeremy, I have to ask you, because there's been a lot of reporting about your own relationship with Evan Spiegel and Bobby Murphy. How is your relationship now with the business? Because it's felt that potentially some of the lack of shareholder control of Snap since it listed was in part because of some arduous, onerous points of view that you put on as a seed investor. Do you agree with that coverage?
You know, over the course of 5 years, there's going to be some points of friction in any relationship. And what's more important than that is whether or not you can work through it amicably and find a common solution that everyone feels good about, so you can work towards a common goal. And we did that with Snapchat, and I think today, while the IPO is certainly not the end goal, it's an important milestone for the company and one that I think is worth celebrating.
Do you think that the restrictions you put in place as a seed investor were onerous, or is it just what comes as part of being an investor when you're a venture capitalist and going into these very young companies?
When we first met the company, we were really clear with them that we were very interested in what they were doing, and we would love to continue to invest in the company in the future, and that's what we've been able to do.
You talk about the IPO not being the be-all and end-all, but a very key milestone. You've got, I have to say, looking at the companies you've invested in, you're in AppDynamics, so that was meant to IPO, but then got caught up by Cisco. You're in already another one that's lined up at the moment, MuleSoft. Are we going to see yet more and more companies, particularly potentially from your own portfolio, that are going to list in 2017?
Well, MuleSoft is on the docket. Nutanix went public in September, and that's traded very well since then. Snapchat today. So the interesting thing is that a lot of these investments were made a long time ago. Yeah. You know, 10 years ago for AppDynamics, 8 years ago for Nutanix, 5 years ago for Snapchat. And so this is the result of consistent hard work, working with companies as their very first investors. And while it's all coming to fruition now, it's the result of sustained effort over time.
Our conversation with Lightspeed Ventures partner Jeremy Liu. Now that does it for this edition of Bloomberg Technology live from New York. Tomorrow on Bloomberg Television, I'll be speaking with Margaret Vestager. She is the European Competition Commissioner. That's going to be live on Daybreak Americas. Do not miss it, because she'll be discussing all the regulation out of Europe, as well as the big Apple case. This is Bloomberg.